Right. I think we can go ahead and get started. I'm sure people might trickle back in, but I think Larry's recording it, so we'll have that posted afterwards, and I can send you guys over a link as well.
Sounds
So
good.
yeah, thank you everyone who showed up, and thank you Thad and Sub for coming on. Very excited to hear about the new DeFi arm of Alpha Shares, Momentum. So if you guys want to go ahead and dive in, could just kind of give us an overview of the project, and we can go from there.
Sure. The last couple AMAs, I kind of started it out, but I'm going to let John, you start out this time if you want to give a little bit of a different spin on things.
Okay, sure. Well, thanks for having us. My name is John, and I have been working with Tyler now since beginning of February. That's when we really got started on all of this with Alpha Nodes, and that grew into Alpha Shares. We launched Alpha Shares in August, and shortly after that, we got into some discussions and we realized that we needed to make some changes to the tokenomics around it. And part of that involved looking at different stabilizer technologies and figuring out what we might be able to do with Alpha. And at that time, I met Lord of Cry through our mutual friend Mel, who's been working with us, and I think you guys as well on the design side. And he and I got talking about the stabilizer tech, and he presented the idea of the LP manipulation. That was looking like the best option for us at the time. However, once I did some more research and wrote a lot of tests and got some things figured out, I realized that the alpha token at that time was not a good candidate for it for a few different reasons. The main reason was the lack of liquidity. The alpha token was a holdover from the alpha nodes days, and liquidity was never really prioritized because most of our holders really liked the volatility of it. And we knew that the volatility was a double-edged sword going forward, and I knew that it was going to be a much longer effort to change these tokenomics to improve the token as the reward mechanism under alpha shares and also provide other utilities for it. So the idea of putting the stabilizer behind the alpha token was shelved, most likely indefinitely at this point. And I really got interested in learning more about what could be done with stabilizer tech and these different techniques. The Momentum project was born out of all of this learning that I did and the huge amount of tests that I wrote around what was going to be originally the stabilizer on the alpha token. That's where the ideas started to form. And I realized that with some rewriting of that stabilizer contract and pairing that with some changes to the ERC20 standard, some augmentations to it, and then also applying some of the learning that we've had along with reflection tokens along the way, that we could come up with something that was going to be really unique. And when you put together the reflection token idea with the stabilizer, you're able to solve one of the main issues with the reflection token, and that is that in order to distribute dividends with the reflection token, you have to sell it into the chart, and that causes a lot of downward price pressure on it. So that's one main thing that this tech was able to solve for us. And by implementing the elastic token supply and making this whole system neither inflationary nor deflationary, I was able to implement the price increase mechanism as well on top of that. And all of these things combined give us this opportunity to prioritize liquidity above anything else. Market cap is always secondary to us. And because of this, we're able to have this incredible runway to be able to slowly increase this price. And then with the addition of the bonding mechanism, we're able to build a treasury that gives us the ability to get into some high impact investments. And so far, we've already purchased a couple of validator nodes, and we've made our initial investment into the multi-million-dollar mining operation in Paraguay that is going to be coming online in late quarter 1, quarter 2. And these investments are then going to be creating returns that we will be distributing to mass holders through a token lockup mechanism that is going to be released here very soon. So my take on all of this is very different than I think the way that Tyler presents it. And I always focus more on the technical side. So I want to just hand it over to Tyler, and Tyler, you can add anything that you feel that I may have missed there.
No, you really covered it all. I love when you bring your side, the whole technical side into this, because I mean it wouldn't be possible without the whole development side of things and the customization and really the proprietary mechanisms that you built. I think you've really covered it all. There's a lot of stuff, from an overarching business, the ecosystem side of things that I could get into. But first, I'd love to toss it back to the Lava Financial guys and see if you guys have any questions for us. Probably weave in everything else into the next questions.
Yeah, sure. So I guess my first question would be, because you talked about the elastic token supply. Could you just kind of go into that a little bit more, just for those who aren't familiar with what that concept is?
Mm-hmm. So elastic supply exists when you don't put a cap on the token, when you leave the ability for minting and burning. And then it's going to be up to the good actors that own the protocol to ensure that those are used properly. And in this case, what we're doing is we are controlling supply, and we're making it entirely demand driven.
Okay, that makes sense. So for the, I guess my next question would be about the mining operations. I know that's related to the singularities, right? There's like this the lockup and staking. I don't know if you would call it staking, but like the lockup mechanism.
Mm-hmm.
Yeah. So
go ahead.
Yeah. So from my understanding, the way that it's going to work is that you kind of like lock up your tokens for a month, right? And you can bond into that. And then while they're locked up, you get access to the treasury investment, kind of like through a rev share model.
Mm-hmm.
So
that's right.
Is that accurate?
Exactly.
Okay. So you say that like when you bond into a singularity, what does that mean exactly?
That would be taking the same mechanism that we currently have in place for the 7 or 14-day bonds, and then applying that over to the singularity side. Now, the big difference is that with the current bonding, you're not going to be earning trading dividends on tokens that haven't invested yet. But that's going to be different when you bond into the singularities.
Okay.
Those tokens, so you'll get credit for those immediately. And
so it's like, so you basically have the full bond immediately, but it's just locked up for the 30 days?
That's right. You won't be able to withdraw them for 30 days.
Okay, that makes sense. So how does, I know that it kind of all feeds back to the alpha share system, and I'm sure Sub can also speak to this as well, but how does the Momentum project kind of benefit the current alpha shares token and NFT holders? I know you guys just launched your LP staking as well. Mm-hmm. That's kind of exciting. So could you speak to that a bit?
Sure. Yeah, I'll take this one. Many different benefits, and everything that we do with both protocols is entirely meant to be synergistic in nature throughout. The initial benefits and what we've already rolled out are, for one, since we've announced that Momentum is underneath the AlphaShares brand, weekly we've been bridging over treasury profits and depositing them into the Alpha token, basically purchasing Alpha token and putting that into the distributor. So people that hold an Alpha Pack NFT, they'll earn some more dynamic rewards directly from the activity on the Momentum protocol. That's just like a single feed mechanism. The one that we just recently released with the launch of the Momentum project on Avalanche is exactly what you just mentioned. So the ability now for us to deepen the liquidity on the Alpha token, kind of going back to what John was even saying initially, we knew that the Alpha token, as the reward token and converting from the original Alpha nodes token, had a lot of work to be in a good spot, to be a good reward token for people to earn, claim, sell, so on and so forth. We wanted to deepen that liquidity. But how can we make that liquidity providing attractive? And so the way that we were doing that is actually 5% of all bonds that occur on the Momentum Avalanche chain, they go feed directly into that pool. And so you can actually claim mass by staking Alpha USDC LP. And people have been loving it. We had a lot of people that were weary of the changes that we were making with the Alpha token. When we announced that we were going to be announcing that coming soon, fixed emissions are going away, and turning off the ability to mint our NFTs with the Alpha token. A lot of people thought that was the only utility, but we're proving every day here that there's more utilities for it. Being able to be staked, earning from the other protocol rewards, and future, well, not just future, but even current, all rewards that are coming from investment activities, marketplace revenue, so on and so forth, they go to buy the Alpha token and distribute it. So that's where the health comes there. To touch on the whole ecosystem, though, and kind of how it all is meant to feed back together, because these are kind of immediate gratification style things, right? There's many different, tactics, I guess you could take, or strategies rather, that you have to take to make a protocol successful. You either have to give some immediate gratification. Not sometimes. You always have to give, especially in this space, people immediate gratification. And so people with the Momentum project, they're earning that. Yeah, as we all know, people in the Momentum project, they're earning that right now with reflections from trading volume. The Alpha Pack NFTs, they were earning, and they still are, static fixed emissions that were coming from when people were able to mint with the Alpha token. But all of those things, again, are immediate gratification. People love them, but they're not sustainable. None of these things are sustainable. And we've all had the experience over the past year seeing projects that start and utilize these mechanisms to provide incentive, to provide rewards, to get people to be like, look at this, I can click a button and earn passive income. But it's not true. It's not sustainable. It won't last. The only way to make a project last, literally the only way in this space, and if someone says otherwise, they're just straight up lying to your face, is by producing external revenue that comes from the outside, from a product, a service, creating value somewhere. And if that value can be created, monetized, and injected back into the system, then that means that you're having outside revenue pay these rewards, and it's actually sustainable in that manner. You're not having new investors coming in and paying the rewards to others, which, as we all know, is Ponzi-nomic. So the ability to do that is paramount here, and that's why we've been pursuing this opportunity down in Paraguay for the mining operation, because we've got an opportunity there that many people across the world don't have. And that comes from the 3 cents per kilowatt hour power cost that we have from the fully renewable hydroelectric energy that's down in Paraguay. So that's really where this all stems to. Both Momentum and NFTs, they are used as fundraising mechanisms to allow people to fractionalize into these investment opportunities that otherwise wouldn't be available to anyone as an individual, not just because of the monetary requirement for it, but also because of the localized opportunity. Not many people have the connections that luckily John here has with his family down in Paraguay. And so to further even on that, John's going to be moving down to Paraguay in the beginning of January to oversee this entire mining operation. So because we're making these big steps and going about it in this professional manner, this is how we see the long-term sustainability of the project and how both projects intertwine.
I love it. Talk about some serious dedication to actually move down to Paraguay to oversee that. That's awesome.
Absolutely.
Are you guys going to be mining, is it Bitcoin, or are you mining other tokens as well?
It'll be majority Bitcoin, but we're looking into Cadena as well. Cadena side, the miners are a little bit harder to get a hold of. And so a lot of this is going to be dependent on the availability.
Okay. Have you guys looked at, this is kind of like a little bit off, but have you guys looked into Caspa? That's one that I've seen kind of floating around a bit. It's a new like proof of work token. I'm not sure where the profitability is on that, but I know that's been getting some attention.
We've heard go ahead a couple times now, and that's something that we're definitely going to be doing some research into. But I can say that I know nothing about it currently, other than people are mentioning it to us.
Gotcha.
Same. We're going to always entertain looking into other opportunities, right? As long as the risk analysis is there and it's not a big required investment for something that's volatile, small. We're not unsure what the future is, but some of these tokens, they're super, super profitable at first. And if we can hedge our bets against them with a little bit of the budget, I think that's definitely the way to move forward. But definitely Bitcoin and Cadena at first from a majority perspective.
Yeah, and I think you guys are. I think you're investing at kind of the perfect time as well. You seem to be. I think we're closer to a bottom than anything else. So, I know you guys just bought your ETH validator, right? And also the AVAX validator.
Yep.
So yeah, I mean, pretty great prices on those as well. So as things kind of pick back up, the actual revenue from those and also from the Paraguay operation should be feeding back into the mass system.
That is the goal.
Yeah. So I saw, like, from the chart, you can kind of see it seems to be, it's like a slope almost. Is the token increase, is that something that's going to taper off at some point and like level out, or do you plan to, like, is there some kind of back end thing that you guys are watching for when is a good time to level it, or can you speak to that at all?
The answer is yes to all the above.
Okay.
Yeah, so the token, of course, when we first launched it back on October 23rd, it had a very steep price increase, and that was sustainable because we had a lot of buys coming in. That was before we really had bonding and anything like that. And over time, it's a matter, or it's a factor of the liquidity health versus the volume coming in and the price itself. And so we're just keeping a close eye on that, making sure that nothing is rising too quickly here, and always prioritizing that liquidity health because we do want to ensure that we have the runway that we need. And we also know that once these singularities are released and the value is really being shown and returned back to the investors, that the runway will be far extended.
Gotcha. Do you know when the mining operation and I guess the validator rewards are paying out now, but do you know when, like, will the singularity stakers be earning immediately once that launches, or?
Yeah, so the way that we're working this is that we have an allocation for the treasury that is going to validator nodes, and we have an allocation that is going towards the Paraguay mining operation. Validator nodes, of course, are very simple to spin up and start bringing back into the mass ecosystem, whereas the proof of work mining, that's a long tail. That's going to be end of Q1, possibly into Q2, before returns really start to show up for that. The reason is because we're going with a 40-foot mining container, and it's a multi-million-dollar operation. Now we can build this in stages, and we will definitely be doing that. But even so, that still requires quite a bit of setup time. So we definitely want to get these singularities up and running very quickly, and we're going to have all the details released by the end of this week on not only how they're going to work, but also the timeline for the launch of the singularity system. So keep an eye out for that in our Discord, and we'll be announcing on Twitter as well by the end of the week. The part of the reason for the 30-day lockup is because that also coincides with typically what we're going to be staking on the validator nodes. We don't want to go and lock up all of our AVAX for a full year because we don't know exactly what's going to happen with price. And so we're trying to reduce the risk on that for everybody involved here, and be able to diversify and be agile as much as we can while still reaping the benefits of doing these staking programs. And that's just typically what it is, 30 days, and we'll have the distributions happen within that period. One other thing on this too is that when we do release the information about the singularities, you will have time to vest any 14-day bonds that you have up to then before any of the payouts would occur on the singularities. So we're keeping all of that in mind as well. We don't want anybody to miss out on that.
Okay, gotcha. Awesome. Well, that's exciting. Looking forward to reading about that. I'm going to throw it over to Larry. I think he had a couple questions as well. If you want to jump in here, sir.
Yeah, sure. Hey guys, how's it going?
Good, how are you?
Yeah, I'm good. So yeah, you've talked a lot about the sort of technical side of things and how it's all sort of structured back end. But if there's anyone sort of listening in the audience who hasn't heard of Momentum before and isn't invested, from their point of view, how do they get involved in your project? What, talk us through it, baby steps for a new investor.
Sure. So, well, there's a couple different ways. It's not just very straightforward. We have actually talked about quite a few of these different aspects and factors, but haven't really put them all together yet. So I'll try to do that here. Obviously, the MAS token is the token for the ecosystem, for the Momentum Finance ecosystem. Like we said, at its core, it is a reflection token, meaning by holding that token, you're going to earn off of trading activity of other people, and you're going to earn dividends, and those dividends are going to come in the form of stablecoin, either USDC on Avalanche or BUSD on Binance. That's not the only way that's to earn, as we've just stated, with singularities that are going to be up and coming. But the current way to earn is through those reflections. Another way that you can quote unquote earn is by bonding. And the bonding does something unique where it allows you to purchase MAS tokens, by avoiding the buy tax. So if you were to buy just straight on the decentralized exchange, you'd be hit with a 15% buy tax. And when you went to sell, you'd be hit with an 18% sell tax. And so those sell taxes and buy taxes are there to keep the protocol health healthy and to keep the liquidity healthy as people are selling their tokens. It's all baked into this overall ecosystem. It'll make more sense, I think, in a second. There are two different bonds. There's a 7-day bond and a 14-day bond. Both bonds avoid buy taxes. But what's the difference between the two, you ask? Well, great question. The 7-day bond only avoids buy tax. So you would be able to purchase, and let's say it was $1 a token and you spent $100, you would receive 100 tokens vested over 7 days. Great. When you go to sell those tokens, yes, you'd be hit with the sell tax, but also that's where we have that constant price appreciation that would most likely eat up any of that loss. When you get to the 14-day bond, that does the same thing of avoiding that buy tax, but you also will avoid the sell tax. And how does that work? Well, you still are going to get hit with a sell tax when you sell your tokens, but what a 14-day bond does is it actually vests you with 25% more tokens. So the same example at $1 a token and going and bonding with $100, after that 100-day period and 14-day period, your $100 is going to turn into 125 MAS tokens. So you're going to avoid the initial buy tax. You're going to earn 25% more tokens, which will account for the majority. Well, it'll account for more than that sell tax and actually leave you with a little bit extra. So some people right now are using this system as an early, bootstrapping mechanism for everything about the protocol and liquidity to kind of loop into these 14-day bonds. And that's what we're seeing currently. But many different ways to get it, as I've stated. How you actually do that is you go to our dashboard. So you go to Momentum Finance or momentumproject.finance, hit the dashboard, and right there, if you have BUSD or USDC in your wallet, you can bond. And the other way is the traditional on Trader Joe or PancakeSwap.
Perfect. That was a great walkthrough. So you guys are on BSC and AVAX right now. Why did you choose those particular chains, and are you planning on launching on any other chains, or are you just going to focus everything now on the Singularity?
So we do like the fact that to go across chain, typically you have to deal with complicated and sophisticated liquidity pools that bridge, and having to deal with those bridged funds and wrapping tokens and all of that sophisticated fun stuff that also opens up quite a bunch of unique attack vectors. And we see that all the time, even with very, very large protocols. And so the unique thing about the momentum mechanism that John here has built is that we can actually constrain the price via the contract in a way that's not having to go and actually bridge funds. Can you go and take your MAS on one chain and convert it into MAS on another? No, you can't. But there's no point to, because the tokens are the exact same value, and that's because they're constrained by that momentum mechanism. So really the whole point here is a convenience factor. We've come across a lot of chain maxis that prefer to be on one chain over another. And so we're just opening it up and allowing for this protocol to be cross-chain. If you have certain tokens in your wallet, you can still participate. And the way that the singularity rewards will stack up is it's going to be across all chains, however many people are in a singularity. And so it just really is that convenience factor, allowing people to get involved no matter where they are. I myself and John, we're not chain maxis, but we know that there are still quite a few people that are. And so why not just be able to push this out in a way that's far less sophisticated than usual?
Yeah, absolutely. You also have a pretty good referral scheme going as well for anyone listening who is invested. If they can recommend anyone into the scheme, then they get, is it 5% off the top of my head?
That is true. They get 5% of the bond value of the person that they referred. However, that is something that isn't going to be here forever. And we've said that from the beginning. Definitely helps with getting the name out there and making sure that, you could go and spread the love, find more people, and you can share in the profits. It does, come out of our pocket paying those referral values, but it does definitely work. It has its impact. It also has its downsides, but get in while you can, I guess I can say.
So that's more of a bootstrap feature then to get the protocol up and running, and you're going to sort of phase that out fairly soon. Is that fair to say, or has it got a bit more runway in it?
I will just leave it as it won't be there forever, and the team is having discussions about that. So we know that it's not like it's hurting the protocol in any way, shape, or form. There are some people that are trying to game it and use it on their own wallet, and they can't actually do that. It's funny getting tickets. Hey, why couldn't I loot my own wallet into my referral? Well, you idiot, you're not supposed to. But it's not going to be there forever just because the way that the protocol is going to work moving forward is like everything that we do, Alpha Shares, Momentum. There are many different mechanisms we may use for bootstrapping, getting that initial marketing out there, getting that visibility. But then everything has to move in a very dynamic fashion very quickly so that everything can be sustainable. So everything that we do here it has its longevity. It has its health.
Yeah, it certainly seems like you guys have got the longevity sort of front and center, which is always nice to see with any sort of new protocol like this. I know you
Absolutely.
sort of you touched upon managing the liquidity briefly, but I'm invested in Momentum myself, and I've noticed that the liquidity and the market cap have started to sort of get further and further apart over the last couple of days. So how do you plan on actually managing that if they become sort of too decoupled from each other?
So there are a couple different ways. I'll let John hop in if he wants to, if I miss anything, of course. But there are many different ways that we can kind of play with our little knobs and our dials. One of the biggest ones is obviously the split of when someone bonds, what goes to the treasury versus what goes to liquidity. So that can be adjusted and made to favor liquidity more highly. Like we also said about price, if we ever come across an issue, not an issue, but rather a phase where the health ratio of liquidity to market cap is at a point where we think we might need to start to flatten the price out a little bit until the liquidity raises back up. That's kind of how that works. There's many different ways that we can factor this in. The biggest thing, and we've said it from the beginning, is that ratio, that liquidity to market cap ratio. And so there's a couple different things that we can adjust to make sure that stays consistent. With the singularities, though, coming up here soon, and again, I don't want to speak too much because John even gave some alpha there saying that it'll come out before the end of the week, which everyone that's listening here too, you're getting that alpha now. Stay tuned before the end of the week for the singularity announcements, but those singularities are also going to significantly help with that as well. So there is a certain cadence and strategy here, and I think everyone's going to be happy with what they see. We obviously want to make sure that liquidity is as close to that market cap as possible.
Yeah, sure. So the singularity really is the sort of long-term plan for the project, then, right? You talked about the mining operations in Paraguay. Do you guys have any other sort of real-world investments in the pipeline that you can share with us, or even not share with us, but just let us know these other things? Is there anything else going on behind the scenes?
There are a ton. One thing that I can say that just spreading sentiment is down in Paraguay. Paraguay is an amazing country with an amazing breadth of opportunity. We can really do so many things there, and the country is very crypto friendly. We have a lot of established connections that allow us to get the necessary licenses and permits to do everything that we want to do down there. And so it is nice, and I've gotten a lot of people asking about that, about this specifically. Is it's very easy to get crypto into crypto investments, right? Spin up your tokens into a validator, even purchasing mining equipment you could typically do with cryptocurrency. When you get into the United States, it becomes quite convoluted trying to convert crypto to real money and then having that real money be invested. You avoid a lot of that being down in Paraguay, but there still is obviously constraints and stuff when you get into bureaucracy. So we're looking into those things. I can't say exactly what's on the boilerplate per se, but we definitely have a lot of things, and especially with the way that the market's going, it would be awesome to be able to bring these real world investments to people in crypto that aren't dependent on what the crypto market's doing. So absolutely, can't really say what those things are, but 100%, we're looking at those every single day. John and I were just down in the beginning of October down in Paraguay, and we were exploring a number of opportunities that nobody even yet knows about besides the internal team, and we're still trying to pursue exactly how we can accomplish those goals.
Yeah, it's really cool. It's exciting. I really do like the project, and given your guys' history with alpha shares and stuff, I've got a lot of confidence that you guys are going to be able to really build something here. I'm not sure that I have any more questions, to be honest. I think you've answered the question so thoroughly that I don't think I have anything left, to be honest. Is there anything else that you guys want to say about the protocol, or that we haven't covered, or anything that we've missed that you can think of?
Yeah, I've got one thing, and it might spark some more questions. And I don't know, Apple Juice, if you got anything, I'll let you follow up with that in a second. It's been burning on my mind, and I want to say it because it is a really fun way to look at this. And I say it in almost every AMA, and John's probably like, oh, he's going to go say it again. But John brought it up to me when we were first talking about the protocol and kind of what the difference of getting involved or invested with Momentum is versus alpha shares. Obviously, they both are combining together to achieve these unique investment opportunities. But what's the difference, right? What should I do? Should I go invest in alpha shares with an NFT, or should I get involved with Momentum? And this is something that I really think is a fun mind game to have, I guess, if you will, a mind not experiment, exercise. There we go, where you can think about, hey, what does the future hold? What does it look like here? NFTs are a fixed barrier to entry. You have the mint cost, or you have the floor cost. Let's say that's $100. If you have $100, sure, you can get an NFT, you can get involved. And the benefit there is that you're always going to hold that one NFT out of that explicitly capped collection size. Let's say it's 10,000. If you hold one NFT, you'll always have your fractional ownership of 1/10,000th of that collection. And that's really what we've always found, even when we developed alpha shares, the true benefit of NFTs, being able to fully fractionalize and tokenize someone's ownership into something. However, because there's that fixed barrier to entry, not everyone can afford that mint cost or afford that floor price. In return, if someone wanted to divest from their position and they wanted to sell that NFT, it's not like an AMM and a DEX where you could just go sell your tokens into a liquidity pool. You have to find a buyer. You have to put up a listing, find a buyer. It's far less of a liquid position. And so it's really cool to look at Momentum in a way where it allows you to get involved with these investments in a far more liquid way. Because now if you don't have $100 for that NFT, maybe you've got $50 and you can put that $50 into a bond or spinning it up into a singularity with the Momentum project. And that's going to allow you to participate in the same earnings that these NFTs are making, but it's going to be completely dynamic and proportional to however many other people are staking their tokens into a singularity. God, I can't speak. Very synonymous to when you have LP tokens that you create and you stake into a pool, you have your share of the pool. Singularities will be similar. And let's say you finish your singularity period and you want to divest your position, you could just take your tokens and sell them immediately because it's into an AMM. So that's the way we really look at things here, is both protocols are going towards this long-term, very heavy, multi-million-dollar investments that are going to produce awesome income and provide it back to the system. But we have very unique ways and give you guys a ton of different options on how to participate. And that's the really fun part about this too, is we got NFTs on one side and Alpha Shares focuses completely on the NFT side and just a little bit of alpha on that. The launch date for Ethereum is going to be coming out here very, very soon. So stay tuned for that. But it's really cool how we can really put both together to achieve these goals.
Yeah, it's really cool.
I love it.
I love projects like that where, as you said, you offer sort of fractional ownership for otherwise unattainable investments for, the average investor. I think it's really cool. And, it's going to appeal to a lot of people. So I think, you've got a lot of good stuff going on. Do you have any more questions, Juice? Or?
I don't have any more questions. No, I just want to say it's really nice to have a like just to hear that like how much you guys have going on as far as bringing like actual revenue generating businesses and products into the ecosystem and using that to reward the holders because it really turns it into a more comfortable investment to hold for the long term. It's not this kind of like stressful, when is this thing going to collapse kind of investment where you have to be monitoring, like when to get out. It's okay, I can buy this and these guys are growing. So I'm comfortable holding this thing forever and just, investing into actual passive income like you would a stock or a business. You get your dividends. It's not a lot, but it grows over time. That's the idea. So I love that you guys are really diving into that aspect. Where we kind of have the same ethos here at Lava as well. So but no, I don't have any other questions. Just wanted to give kudos to you guys and thank you for coming on.
Absolutely. No, thank you for having us too. And I definitely can see the same ethos being driven with you guys here. And I think that it's absolutely necessary in this market. No, we're not going to make it if we continue to do the things that it was very fun playing the lottery, over the past year and a half. But
yes.
no more be in the house and just sucking at a bunch of gamblers. Instead, let's generate some real businesses, generate some real value, and share that with everyone. Exactly. So thank you for having us today.
Well said.
Of course.
Yeah, thank
All
you,
right.
everyone.
On that, we will go ahead and close it out. Thanks again, guys.
Thanks for coming on. It was
Absolutely.
great talking to you guys.
So great, Mr. Meek. Thanks, Larry.
Thanks, you too.
Take care, guys. Bye.
Bye.